Hey there guys, welcome to our channel Tech AI Hub. In today's video, we are going to explore about AI trading bots. In the dynamic realm of finance, AI trading bots stand as revolutionary tools, harnessing the prowess of artificial intelligence, AI, to automate stock, commodity, and financial instrument trading. These computer programs leverage sophisticated algorithms, integrating machine learning and deep learning techniques to scrutinize vast datasets from diverse sources, such as market data feeds. This video explores the advantages of employing AI in crypto trading, delves into real-world applications, highlights potential challenges, and contemplates the future of AI in the crypto trading landscape. The evolution of AI trading bots. AI trading bots, exemplified by entities like Forex Fury and AI Crypto Trading Bot, employ multiple trading strategies and unique algorithms. Their adaptability to changing market conditions enables them to maximize profits by making informed decisions on when to buy or sell assets. These bots undergo continuous learning, refining their decision-making processes over time. Advantages of integrating AI in crypto trading. Machine learning, ML, is at the core of AI's influence on crypto trading. ML algorithms swiftly process vast amounts of real-time data, offering unparalleled speed and efficiency. The advantages include speed and efficiency. AI-powered systems execute trades in milliseconds, outpacing human traders and legacy systems in responding to market changes promptly. Risk management. ML algorithms analyze historical data, providing real-time risk assessments and suggesting appropriate strategies for effective risk management. Pattern recognition. AI excels in recognizing complex patterns within datasets, aiding traders in identifying market trends and making informed decisions. Predictive analysis. ML models predict future price movements by analyzing historical and current market data, offering valuable insights for traders seeking profitable opportunities. Fraud detection. AI surfaces fraudulent activity, enhancing security in crypto trading by alerting authorities to suspicious patterns or trends. Personalization. AI adapts trading strategies to individual investor goals, providing personalized investment recommendations and reducing emotional bias. Real-world applications of AI in cryptocurrency trading. In a 2022 report, NVIDIA shed light on the state of AI in financial services, emphasizing AI's impact on both traditional and crypto financial sectors. Some noteworthy applications include algorithmic trading bot systems. These systems utilize predefined algorithms to execute trades based on market conditions, analyzing multiple cryptocurrencies simultaneously across various exchanges to optimize real-time trading strategies. Sentiment analysis. AI algorithms analyze social media posts, news articles, and textual data to gauge market sentiment, enabling traders to anticipate market movements and adjust strategies accordingly. Predictive price forecasting. ML models leverage historical price data and technical indicators to predict future price movements, aiding traders in making timely decisions to maximize profits. Portfolio optimization. AI algorithms assist in diversifying and optimizing investment portfolios by analyzing various cryptocurrencies, historical performances, and risk factors. Challenges and risks in AI-driven crypto trading. While AI brings transformative benefits, it also poses challenges and risks in crypto trading. Volatility. The inherent volatility of crypto markets presents challenges for AI algorithms, which may lead to flawed trading decisions during sudden price swings or unexpected events. Human judgment. AI-driven systems lack human judgment, making it challenging to account for factors like sentiment analysis, news events, and market psychology that often require a human touch. Technical complexity. Developing and maintaining AI algorithms and robust trading systems demand advanced technical expertise and infrastructure. Over-optimization. Tailoring AI algorithms too closely to historical data may hinder adaptability to new market conditions, potentially resulting in poor performance. Data quality. The performance of AI systems relies on accurate and reliable data. Inaccurate or biased data can significantly impact the quality of AI algorithm performance, leading to faulty trading decisions. Regulatory risk. As AI regulations begin to take shape, the impact on crypto trading markets remains uncertain. Regulatory risk adds another layer of complexity to the evolving landscape, the future of AI in crypto trading. The trajectory of AI in crypto trading hinges on the evolution of crypto regulations. The regulatory process, as highlighted by OpenAI CEO Sam Altman's testimony before the U.S. Congress, is in its infancy. As governments bring cryptocurrency under the regulatory umbrella, mainstream investor participation is expected to increase, propelling the rapid acceleration of AI applications in crypto trading. Whether you are a seasoned trader or a newcomer, considering the integration of AI bots in your crypto trades warrants attention. As we navigate through regulatory changes and the growing influence of AI, the role of these bots is set to become more pronounced, offering traders enhanced efficiency, personalized strategies, and the potential for increased profits. In conclusion, the future of AI in crypto trading holds promise, and as we adapt to the evolving landscape, staying informed and embracing innovative solutions will be key to navigating the complexities of this dynamic market. Thanks for tuning in. If you like this video, don't forget like, share, and subscribe. This is Tech Danny signing off. Catch you up in the next video.